Hello, everyone. Welcome back to the RacialInvestor.com's Broiler Chicken Show. Back. Crypto and stock trading community show. Is that what we call this thing? Um, Welcome back to the show here. What day is today? Today is actually usually we're going to have it pop up here. Sometimes we do. Nope, not yet. What day is today? Today's the 13th. Wow. Jesus, we're almost halfway through this darn month of March already. Man, just marching along here. 2 weeks until the end of the month, I suppose. Also, too, man, we got a nasty Mars Saturn conjunct coming up here on the 4th of April. And I do think that that's all this sort of war stuff. It's all sort of building towards that event. That's some sort of apex. So, man, you can just feel it, man. And how disappointing how quickly this world has fallen apart here. Like it almost, I've been on the planet now 50 plus years, and it just feels as though all of the nonsense that we were spat out as kids of, we in the West are fighting the good fight and democracy will prevail in the order of law and blah, 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 and it all deteriorates just like that. And you got petty little dictators running around murdering people. So sad. Anyway, I don't know when this species will evolve, but I suppose half of what I'm trying to do here is make a positive difference in this world. Maybe a little of the stuff that I bark out here, people will remember, learn in the years and to come, and maybe we can learn from our mistakes. It was interesting, actually. I was even tweeting out earlier. I'm a big fan of things like celestial events that drive cycles. I'm a really, and it, if anything, I kind of don't like it, but I am a proponent, I guess is probably the best word to use, of the idea of cycles. I was kind of hoping that cycles. And I guess the saddest part about all this is if you don't learn from history, you're doomed to repeat it. So we are subject to all these various different cycles, and you can't really fight this stuff. You just have to acknowledge it. And I even see right now that people are totally they're not even acknowledging this stuff. It's happening right in front of their eyes, and they're not acknowledging it. They just won't. And in a weird sort of way, I see a lot of that with the human species. Is through the dot-com boom, it was the same thing. That's 20 years ago. That's the last cycle. I'm seeing basically the same sort of behavior. The sad part about that cycle, sort of me being an adult and sort of understanding the context of everything that was going on, was that was all about, yummy, yummy, and everybody happy-go-lucky and all that kind of fun stuff. It was greed. It was as good as things got. Well, now, unfortunately, at the other end of this demographic cycle, but we also, and this is the kind of freaky thing about this, we've talked about this with site members, for at least a few years now. Back in 2019, 2020, we had the first of the big celestial events to occur here. And there was like 6 different cycles, right? And just think of these, maybe you see, it'll take me a half an hour to find the damn image, but maybe you've seen Brian send these images out. But we had basically like 6 different planetary cycles all come to sort of a head, all almost. I mean, relatively speaking, like celestial wise, this is all basically happening at exactly the same moment because, space and time is so big. So this just so happens to be one of them where we have Mars and Saturn are coming into a conjunction here. And unfortunately, when this happens, it's usually not a very happy-go-lucky time period. And gee whiz, you can really feel. So this was back beginning of February. You can see the planets are starting to align, and here we are. Actually, this is basically where we are right now, middle of March. Here they are lining up here, all tickety boo, and the big sort of oh boy is when Mars, Saturn, and Earth all line up here, and that's sort of unfortunately, like Mr. Putin, he's probably hoping like hell he can have this military campaign. Sort of by the time we get to this, it's just mopping up whatever sort of insurgency is left over, and he can sort of establish himself. Because I think that if they're still fighting in Ukraine and this event happens, then the tide will actually turn against Mr. Putin, and he might actually end up actually losing that war, which would be quite interesting to see what would happen. There was one lady, and I can't remember her name. I did see one reference to it. Now the video itself that I made reference to is slipping back. I better go find it here through the week. But anyway, she made reference to some sort of prediction that there's supposed to be just an absolutely horrific, nuclear event in Eastern Europe, and like a huge chunk of Eastern Europe is supposed to be uninhabitable. So we'll see what happens. Only time will tell. And I wouldn't be surprised that if Mr. Putin starts thinking that he's losing the war, that all of a sudden Chernobyl happens to have this great accident that sort of creates this massive buffer zone that nobody is going from Eastern Europe into Russia because you can't go through it. It's a dead zone. Wouldn't surprise me one bit. Wouldn't. So anyway, somebody write that down. Let's hope that doesn't happen, but definitely on the table here. So, there's your backdrop of the current situation. Yuck. If anything, what's super cool, and I'm so glad I finally got him back in my life because he went through a really, really bad period in his life. And, I mean, hell, aren't we all going through a pretty shitty time period these past few years? But he got hit really, really hard. So, God bless you, Andre, for hanging in there. Anyway, he's headed back to Australia now. And he's like one of my site's only sort of fans of the astrological cycles. And so this is one study that he likes to do with all the conjuncts and oppositions of the planets. So here you can see, we have this huge cluster of shit that we have to go through here coming up here. And interestingly enough, I've been sort of barking about this for quite a while, that I like the idea of I like the idea that this is going to be making like a head and shoulders pattern, that we should see a period of counter trend rally back up top, but it was going to take about as long as this sort of neckline test took over here. So that actually lines up really, really nicely with all these sort of planetary conjuncts. And when the conjuncts happen, oh man, it's a headache central. Interestingly enough, I don't think the Bitcoin's actually really this main focal point here. I think it should be pretty obvious that the main focal point here is Europe. And Mr. Dickhead over there in Russia. Getting back to that sort of first comment that I made about cycles, is technically I'm a US dollar bull now for like literally the next 15, 20 years. Actually, well, the cycle theoretically turned at the end of 2017, beginning of 2018. And it should be 17 and a half years. And that's this cycle, the demographic cycle. So on top of that, we have to deal with the goddamn fucking banksters and the crookery of them, right? So that also happens to be a cycle, and that's the whole money cycle. Probably that's more to do with Bitcoin than the demographic cycle. But nonetheless, point here is, I should be, and actually, frankly speaking, I think the U.S. economy is the strongest economy in the world right now, and it's best positioned. And I think what you're seeing out of Russia actually makes perfect sense. It is actually, think of Russia right now as exactly the same as George Bush Jr. going and picking a fight with Iraq in 2001. Why did he do that? Well, that was the end of their bullish cycle, from 1982 all the way to the millennium. That was the Americans' bull cycle, the greed cycle. And what's the best way to deal with your big bull market coming to an end? And that means your economy, its cycle is coming to an end. Well, let's go and distract the public and start a war somewhere, right? And of course, wars are great ways to engineer your economy out of recessions. The irony of it all, though, is that I think this is completely backfired in Mr. Putin's face. I don't know. We'll see how it goes. I suppose there was a period there through that whole Iraqi conflict where they were probably like, yeah, it looks like the Iraqis have got the Americans on the run, So I get the feeling that you're probably going to see a lot of the similar kind of thing there. Then also, too, I would say, interestingly enough, the Americans just left Afghanistan. I mean, do the Russians stick around in Eastern Europe and be a pain in everybody's ass until the very end of this coming cycle? Could be. It wouldn't surprise me. But I do, hats off to the Ukrainians, man. They're putting up a hell of a fight. And it was actually interesting. There's one gentleman that I do, if you do like to follow this story, this one gentleman's done a fantastic job on YouTube. This gentleman here. And I also like the fact that he actually had sort of one of these super chat things where people would donate money and stuff. And I suppose I should probably do that for these shows. But I'm too lazy. Maybe, Chris, you want to look into setting that up? I don't know. Maybe what we could do is raise money and then donate those dollars to good causes or something. One thing this gentleman did, which I thought was super cool, was he has sponsors of the video. So he turned off the donate in chat. So just people chat and they donate. But the video is sponsored by a VPN, which would make sense. If you're anywhere in Eastern Europe, you probably want to be using a VPN. And really, I should be using a VPN for that matter. But anyway, point is, I think this guy does an absolutely fantastic job of summarizing the sort of on-the-ground situation. And he's got this really cool sort of real-time map that he updates with actual logistical sort of where the battle lines are and sort of key events and stuff going on. Really, really top-notch work this gentleman's done. Gave him, of course, likes and shares and thumbs ups and stuff like that. But like I said, you got to hand it to the Ukrainians, man. They are putting up a hell of a fight here. And if anything, I thought it was interesting. People are all proud of the Syrians and stuff coming in. And they had video of these Syrian soldiers coming in. And the guy commentating, guys, goes, these Syrians, they're going to get slaughtered. Just is quite remarkable to listen. And he just sort of went through the video and says, see the way that guy's acting? Look at the way his arm is shaking and stuff. These guys are scared shitless. They're going to get just destroyed. So I thought that was fascinating. But anyway, really, really good report. And this guy sort of not really overly biased one way or the other. I think he is biased, of course, towards the Ukrainians, but I think he does a pretty good job of reporting what's actually happening. So if you don't know that, you can pop on my YouTube feed. I don't know whether TRI wants to get into the business of retweeting this kind of stuff. If anything, this is sort of one main reason why I really wanted to get this TRI PMA feed going. This should be like the official sort of TRI Twitter feed, and it should have everything to do with trading and everything to do with psychology and everything to do with PMA and trying to, build better plans and, sort of market information and stuff. And less about, Brian's ranting about, oh, this damn politician, that damn politician, blah, blah, blah. So check out TRI PMA feed too as well. Like this, Josh, he does an over-the-top job on this feed. It's just so impressive. So anyway. Okay, so I guess what I wanted to show you where I was going with all this was number one, we've got a really big celestial event coming up here that's all about the gods of war, which is rather disappointing. I don't think it really has that much influence on the Bitcoin price, other than we should see some sort of trough come in here. We've talked a little bit about this being a potential head and shoulders. Technically, this could be a megaphone too if we look at the levels in earnest. So I do like the idea of some sort of swing pivot coming up here relatively soon. That wouldn't surprise me if we actually go back into rally mode here a little bit. And I think the whole sort of point here of why asset prices themselves are a little bit toppy is because about the Fed. And the Fed, when the Fed is sort of we're going to raise interest rates, we have no choice, we must raise interest rates, cost of money has to go up. All of these kind of risk on assets, they all take a bit of a pause. They just have to. I mean, it's just the way capitalism works. So, you want to just take something really simple away from the market and think about the 4-year cycles with Bitcoin. If you are a cryptocurrency enthusiast, these cycles. Don't fight this shit. I mean, it's almost stupid when I hear people fight this stuff. It's almost like, Bitcoin in itself is very algorithmic. Algorithmic. So as a result, it has no choice. At least if it's like a penny stock or a shit coin or something like that, then it can be subject to market manipulation, right? If you have a relatively small liquidity, and there are people manipulating the market and stuff like that, that's this guy. So this guy, he can push around something like that. But do you think that guy has any ability to push around something like Bitcoin right now? It's way beyond his his pay grade. So I like the idea actually that we've been going down for a while now. It sure feels as though we're due for some sort of pivot. But like I said, and I've said this a few times, I think we got to get through this. And I think it just simply means we're going to fuck around with these lows. Maybe we'll look at that in a bit. But I do actually like the idea of a nice big fat rally back up top here. And like I said, I wouldn't be surprised. And actually, if you start looking at the interest rate, where do I have that? Here, I can even do it here. The interest rate situation. This is probably, if the Fed doesn't act, we've got a real problem. This is what's called the TED spread. Although the TED used to be the T-bills. There's a government guarantee. Unfortunately, the U.S. government's bankrupt, and they handed everything over to the banksters. So now we call it the Fed spread, because this is the Fed funds rate. That's the guaranteed rate in the market. But you can see, anytime this relationship gets above 1.0, we have problems. So there is your U.S. housing financial crisis. Uh-oh, that's not good. This was actually the initiation of the Iraq War and all that, right? Right here's 9/11. And interesting enough, this was one of the first Fed. They did a big repo back here. And if you look at like the value of the US dollar, it took a huge punch in the nose right here. And this sort of started the cascade of the garbage currency fiat system that we're in right now. Is that this is almost like an unstoppable cascade now. And so long and short of it here, we got, problems are brewing, folks. My hunch is the Fed's got to raise rates, because the orange is actually this is the market itself. And a lot of people sort of they con themselves into thinking that the Fed actually can control the interest rate market, and that's nonsense. And I don't understand why they don't drive this home more. The market is far bigger than any particular government. Usually after a crisis happens, a whole bunch of people get wiped out. Then the government comes in and goes, okay, well, we'll buy up, we'll put a floor in the market. We'll buy up these assets at like, say, 5 cents on the dollar. And then if they just hold on to the assets to maturity, they make a fortune. And that's exactly what this whole fucking QE thing is. And the worst part about this go round is it's the Fed that's buying up the paper, not the US government. So who's going to make that fortune, them going in and buying the bonds at 5 cents on the dollar and just holding on to them to maturity, and they mature at $100 or $1? Who's going to pocket those profits? And the Fed has said through the crisis here, well, we're going to turn over realized profits through the crisis back to the U.S. Treasury because we're good people. But what happens when the crisis is done? They still have something like $1 trillion of bonds on their books. So the banksters are going to, and historically, the irony of all this is one of the best, most profitable investments ever made by the United States. In fact, anywhere, any government over entire history of the world. Maybe back in Egyptian times, there was a better investment. Who knows? But one of the best performing investments ever was when Roosevelt created the Tennessee Valley Authority, and he basically bought up all the bad paper from the Great Depression in the 1930s. And the U.S. government, U.S. taxpayers actually caught the windfall of that. And so as a result, you didn't have that runaway inflation that we're having now. Because who's gonna reap the rewards of all this? The banksters are, not the taxpayers. Taxpayers, your currency continues to get diluted, your standard of living gets diluted, and the profits go straight into the banksters' pockets. Yeah, isn't capitalism wonderful? And you wonder why we have these things like the Soviet Revolution. You wonder why, eh? And this is what just angers you so much about this stupid human species, is that it's all driven by 2 words. And if you can get away with it, you're greedy. And if you can't get away with it, then you're fearful. And it's those 2 fucking words that dominate this stupid species always. It's terrible. And actually, I was even watching a video about Klaus and the way that they're programming our society. And they even comically joked about how they were going to use the COVID crisis and the fear around the crisis to carry out their plan. They even joked about it right blatantly in our faces. Sad, really. Anyway, so the point of the matter here is this is the market. The orange line is the market. Jupiter-Saturn cross, by the way, probably the easiest way for you to follow interest rate cycles. Screw listening to these stupid government bodies. It's half of the time the banksters portraying themselves as some sort of user-friendly government agency. Don't kid yourself. Jekyll Island, fucking eating babies and all that shit. They know this, right? J.P. Morgan himself said, how does the saying go? Millionaires disregard astrology, billionaires don't. Well, I would say now it's probably like billionaires don't respect astrology, trillionaires do. So dark blue, that is this banksters guaranteed market. You can see that their hand is being played. They don't have much choice. They've let the inflation genie out of the bottle. And now you can see that they're actually falling behind the curve. The market is shitting its pants right now. And, for the Fed to actually maintain credibility, and you've heard a lot about this recently, you could argue that this Fed spread chart here is nothing more than the market's confidence in the central planners. And when this thing's going ballistic and it's above 1.0, the market is saying, we do not have confidence in you. Is that a good environment for us to be hanging around in? These jerks. So ironically enough, the only way that the Fed can actually sort of confident the market is that the word? I don't know what the term is, but sort of, gain the market's confidence again, so they got to start fucking cranking interest rates up here, folks. That's the only way you can solve this. Because clearly you can see that the market itself is in panic mode right now. Very dangerous. Now, the interesting thing about this is that this is business as usual. There's nothing really new going on here, folks. So here is sort of like the 40-year image of interest rates. And, actually, if you look at sort of interest rates, keep in mind this is an inverse relationship. So rising prices here means falling interest rates. Falling prices here means rising interest rates. So you can see there's rising interest rate environment. There's one, there's one, there's one, there's one, there's one, there's one, there's one. I mean, and this goes back, to basically the past 40 years of our lives. And my hunch is this is exactly what the curve is going to look like for the next 40 years. And we just went through the big Jupiter-Saturn cross that basically is the interest rate money cycle system. There's your great financial crisis. And you might even argue that the banksters knew that this cycle was going to turn over here. And this is the weird thing is that, okay, is this, and it's kind of like what's happening in Europe right now. We know that these cycles are going to play themselves out. How does this actually go from a falling interest rate environment, prices are rising, to now a trending higher or trending lower in price, rising interest rate environment? And you can see it's already starting to happen here. And what I've just done here is all I've done is just averaged all of these previous cycles and just come up with an average of what I think has to happen here. And you can see we're about maybe, I don't know, a third of the way through. And keep in mind, this is the market speaking. So the market doesn't give a fuck about check out. If anything, the fact that the Fed is not moving, they've lost a lot of credibility in the market's eyes. And that's dangerous because this thing might just fucking fall out of bed. Keep in mind, all this is an average. I mean, fuck, this thing might just collapse here. You just don't know. But the Fed has to act. It's losing credibility in the marketplace. And, this is a really good image for the, we should give this kind of image to the MMT people. And they, obviously right up at the top of the cycle, they think money's for free, right? Because they look at interest rates and go, this thing's never coming down, but they don't understand that all these damn things move in circles. And we're at the very end of a cycle, not the beginning. This is the very end. This is the end of a 40-year cycle. But they all think, of course, this is the beginning of the cycle. And so they come out and go, hey, money's free. Money's free. Let's go spend tons of money. And in a weird sort of way, it's the spending of the money and it's the belief that money's free that actually causes the cycle to turn. Does that make sense? It's freaky how this shit works. And it's weird because, we're like professional tea leaf readers. So we read the tea leaves and we go, well, it looks like interest rates are going to have to go up. But what's fascinating is watching the why. Why is this going to happen? So same sort of thing with, this is where I started this whole conversation. Not quite sure why the hell I went down this road. But if we look at things like I want to show you the US dollar index. Like I said, I'm a US dollar index bull now for the next 15, 20 years. So I've been barking forever about celestial pivots, and actually you can almost kind of see it now, right? This was the insurrection. But you can see how this has just made just this incredible saucer bottom. I wouldn't be surprised if we pop our head up into this ABC target up here, and then we're going to have a wicked snapback here. Now, what do you think is going to cause that? My hunch is something like that, and then it goes koosh. My hunch is that actually we've got another big round of free money coming. Why? Because this interest rate picture, it's not getting any better, right? This, and what's funny is you sort of see the rubber meets the road, right? The Fed's got to raise interest rates. But we've got a major problem in the bond market for like corporations. Where's the best place to show you that? Like, I would argue that the whole reason why, where's the best place to show you this? The whole reason why we had that, $3 trillion or whatever number it was, remember Chair Powell a few years ago? Oh, no, we got to put it through, And then the guy's like, shouldn't we debate mortgaging our kids' future? And they're like, shut up, we got to pass this. And I think it's all because of this stuff. And this is not getting any better. So I actually blatantly carved this out for you guys a few weeks, maybe even a few months ago. And you can even see I was kind of thinking, well, maybe we'll get some reprieve here. Nope. See ya. This is what caused Chair Powell and all them to come out and freak out, and we have to dump a ton of money at the market, throw the free money, blah, 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 blah. Well, what do you think, folks? Does that not look like history's repeating itself a little bit here? It's getting a little scary. If this thing starts fucking puking out like this, we could be right back in the soup here. So just be forewarned. The writing's on the walls. Now, how on earth is this going to play out? Because remember, last cycle, they had the ability to throw more money. Don't worry about inflation. In fact, we want inflation. Give us well, you know what they always say, careful what you wish for. You might just get it good and hard. I think they've got it good and hard now. And, as market participants, what we're praying for is that this low here holds. So, I would say, of course, good old 50% rules. That would be sort of our knee-jerk technical target. If this low here can hold, then maybe we've got actually the base, the basis of a base, if you will, coming in here. But this is going to be the $64,000 question. If you're going to follow anything in the market, sort of like, what's the economy going to do? I'd follow this because that's what I think is actually going to dictate direction here. So keep your eyes peeled. Never a dull moment. Interestingly enough, too, I don't actually think that just getting back to the original point. How do you think things like auto sales and stuff are going? You think that's going well? The good part about it, I suppose, is if you look at all the videos coming out of Ukraine, at some point, I suppose, down the road, all of those cars are going to have to be replaced because, man, the Russians have just been blowing up cars right, left, and center. But while the fighting is going on, do you think that there's a lot of economic activity or not so much? I would hate to say that. I think not so much. So these are like corporate bonds. If the economy turns down and corporate earnings are suspect and people can't make their interest payments, what do you think happens to these kind of bonds? This could get dangerous. But like I said, I don't think it's U.S. It would be interesting to look at something like emerging market bonds. Like, I think that's actually the really dangerous place of the market. I can't remember. I know we have emerging markets bonds. Oh, yeah, emerging market small caps. I know we cover it on the site. So actually, maybe if we're lucky, we still have it just sitting there. Over here, down here. It's one of these. EMB, there it is. Yep, in the bottom ETFs, of course. And actually, interesting, right? Short-term bonds, like these are the worst performing ETFs. You don't want to be long these. Short-term bonds, right? Isn't that a short-term bond? Yep, that's a 1 to 3 year paper. That's not going the right direction. That looks pretty bearish to me. All right, how about AGG? This got to be a good one. This is a core U.S. aggregate bonds. Oh Jesus, that's not going the right direction. That doesn't look good. Okay, well, maybe this what's this HYG? Oh, high yield corporate bonds. Oh fuck me, look at that. Oh geez, this looks. I mean, and here, of course, here is the emerging market bonds. And this just actually that looks better than the U.S. government paper, I suppose. But man, that just looks horrific. I mean, that's a definition of a train wreck. So this is the problematic part of the market right now. I don't know how bad this gets, but one thing I did notice, and I was like I said, I was tweeting it out, and that's the whole reason why I went down this tangent a few minutes ago. Sorry, everyone. Is this can't be helping, right? I'm a US dollar bull, and I'm going to be a US dollar bull for the next 15, 20 years. And you go, well, that's nice, Brian, but I don't really like the USA. I'm not necessarily saying I like the USA. What I'm really saying here is I think that the USA shit stinks a lot less than Europe's shit. Europe right now is really bad. They got to go see a doctor. The smells coming out of the outhouse there, not good at all. And I'm often sort of I've seen this happen repeatedly in my career when you go through these long-term pivots, because people just don't get this, and I don't understand why they don't. But you sit here and it's sort of like, well, we've read the tea leaves, we know the planetary cycles, we know the Benner cycles, we know the interest rate cycles, we know the money cycles, we have all these cycles, basically US dollars should go up, euros should go down for the next 15, 20 years. And how do these things happen? What do you think about investing in Russia right now? Is that a pretty good idea? The weird thing is I used to literally have conversations with people like 5-10 years ago, and people were like, serious, Russia is a good investment. Now, I want you all in unison here to remind me, why is Russia not a good place to invest your money? There's one reason only. Nope. Anybody know? Why would I not want to invest my money in a country like Russia? Or why would I not want to give my money to Winnie the Pooh? And anybody who gives their money to Winnie the Pooh, you're an idiot. I mean, I'm sorry. It's probably going to down votes. Hate you. I would just simply say the rule of law is paramount when it comes to investing your money. I know you're going to be like, well, you're trying to tell me the Americans are that. Hey, at least they have a fucking constitution. And the one thing I like about the United States of America is, it might take you forever, but you will eventually have your day in court. And if you have a plausible case, I've seen time and time again, the U.S. court systems, the rule of law prevails. Hell, the rule of law should prevail in my country. What my leader has done recently is, in my opinion, tantamount to exactly the same things that are going on with Mr. Putin and Winnie the Pooh. And he really likes guys like Fidel Castro, who would do exactly the same thing, where rule of law is ignored. You do not want to invest your money in countries where rule of law is ignored. That's dangerous. You're just asking for trouble. I mean, I suppose that's half of the reason why you guys are in Bitcoin to begin with. Is you just can't trust these people. I'm not going to say what's going on in the United States is great and with quantitative easing, but I will say I'll take the United States' version of democracy and freedom, which is very suspect and very, colorful at best, versus something like Canadian rule of law, where my leader can just go in and decide, you know what, you, number one, get frozen out of the system. So even though you theoretically exercised your right to protest, and you wanted to help a protest movement, you are being singled out and I think unlawfully targeted. If we go to court orders and we go to case study, okay, I can buy that. But just dictators coming out with emergency measures acts and giving them the ability to basically freeze out people from this Klaus world order, that scares the hell out of me. And I've said this repeatedly. I keep my fingers across the United States of America and the good citizens of the United States of America. You are at this point one of the last bastions of freedom in this world now. And it's imperative that you hold on to that and fight. Because once you guys go down, if you guys go down, I think the rest of us were screwed. Anyway, go figure. All right, so the point of the matter here is I think that these cycles are playing themselves out, and it's incredible to watch sort of the we know what's going to happen. We just don't know why it's going to happen. And now you can clearly see, I think that the tide has turned for something like being bullish of Europe. I would also argue, too, that, if China wanted to substitute countries like Australia for their commodity sources, now the way Russia's going, that's not going to work. And if anything, I heard one YouTuber recently, I thought it was really cool. He was just, actually, I don't know if it was a YouTuber or maybe it was some state media guy or something. But he actually said what Russia is doing right now is completely and utterly fucking up all of China's plans here that they've tried to put in place over the past 10 years of them sort of taking over the world order, which I thought was fascinating. This doofus up there in Russia is undoing all the work that Winnie the Pooh's been doing for the past 10 years. And I'm sure he's sitting there going, you're screwing everything up, you bastard. So go figure. And what a great analogy of these silly humans. I remember 10, 20 years ago, the case was globalization, globalization, globalization. So what do you think, guys? How do you think the globalization movement's going these days? Do you feel more global? I find it hilarious. We went from, this is a capitalist taking over, right? They called it just-in-time economics, just-in-time supply management. How's that going to go? And what's fascinating is the undoing of the commodity cycle in 1980, I think, was a lot of these major corporations warehouse stockpiles. So whenever these market participants tried to bid prices up, the companies would come out and go, hey, you want silver? I'll give you all the fucking silver you ever want. Boys, bring in the dump trucks of silver. And the Hunt brothers just got crushed by companies like Eastman Kodak. But we don't live in a world like that, right? That was the world following the Second World War, where companies and countries are like, you know what? Maybe we're going to maintain warehouses of supplies. Maybe we're not going to do this, by the skin of our teeth sort of economics, because shit happens in this world. And now you can see that the whole damn thing is just going in a big circle. So my hunch is next 10, 20 years, we're going to go back to regionalism. We're going to go back to securing supply lines and building warehouses and stockpiles to make sure that you don't get caught flat-footed. And the whole damn thing moves in a big circle. we'll go to the next Jupiter-Saturn cross, and then we'll start the whole damn process going the other direction, right? And that's that's my funny little interest rate image. This image. It's remarkable, guys. I mean, it really is, guys and girls. It's remarkable how cliche this whole damn stuff is. It's so cliche. So we can see what's coming. And you can see this is going to take a long, long time period. And in your job as a speculator, interestingly enough, is actually to try and identify this window and this window and this window. And this one wasn't that much. That window. And this was the big one, right? This was the dot-com boom there. You see that from, well, actually, that's right around the end of 2000. I guess that's George Bush's war there, right? That window. And then this is George Bush's bull market. You know, lost another loan to Ditech, big expansion in the economy. And of course, you guys all know this, right? This is our Donald Trump big bull market. But these are the windows that you want to try and identify. They're, in my opinion, they're the best windows to make money. And what you really want to try and do is you want to just wait for these things to turn up. Like here's a good example, just even recently, right? So you remember 2017, we peaked in the Bitcoin price. And so that's right in here. Bitcoin price was falling all the way into 2018. And then, you know, middle of 2018, Bitcoin bull market starts, and there's your rally. Basically the short-term interest rate market falling. Then, you know, this through here, transition, and then of course now interest rates are rising. So we should not really expect huge rallies in equities, huge rallies in risk markets. We got to wait for this thing to bottom and then turn back up, and that will be our next rally. And gee whiz, that's basically exactly the same as this timeline. And what's so cool about this kind of study is because Bitcoin is so algorithmic, you can actually go back over time and you can see these cycles repeat. I mean, look how similar these cycles are. So big rally peak, then 1 year of shit, then about a year and a half of consolidation, and then away we go, halving, and then woohoo. So here we are, 1 year of shit, which wouldn't surprise me. Maybe we back up into a reload zone, then come back down for sort of, you know, this would have, and I do like this thinking because I think that crypto does have a nice little counter trend rally here into sort of the spring and summer. I don't think it's going to be that big. And then I think there's one more big thumping coming up here for crypto in the fall. So notice that's like October, November, right in that time period, and then sort of a year and a half of basing, and then there's next halving. I really like the idea that you just, if you want to invest in Bitcoin, that you just basically, you know, wait about a year and a half to about a half a year before the coming halving. And if we are in reload zones, put yourself on a nice dollar cost averaging plan. It's really, really simple. And you're like, well, okay, well, Brian, that was just that one time. There's no way it could do it again. Well, this is the previous cycle, and it's the exact same shit. It's identical. So there's your year of crap. There's your year and a half of cleanup. There's your halving event. Get yourself on a dollar cost averaging plan. Right? We can even do things like reload zones off of that range there. If market is at or below reload zone, start accumulating. There's halving. Woohoo! There's bull market. I mean, it's shocking how cliche this is, folks. So with that said, none of us should be really in a huge hurry here. You see where reload zones are. And then, you know, this is technical. If we want to throw in fundamentals, well, there is the cost to produce Bitcoins with sort of the super sexy miners right now. One thing I will caution people about, I remember through here, this pullback here, all the way along here, all the way down. Just kept having people say, oh, no, the cost of Bitcoin, it produces 10 G's. And then it'd be like here, no, cost to produce Bitcoin's 8 G's. This is the bottom. And no, cost to produce is 6,000. This is the bottom. Interestingly enough, the only point at which this thing actually was going to bottom was when actually everybody and their brother turned bearish. Right? And at this point, the market professionals were calling for, well, Bitcoin's got to go to 1,000. So we're just heading down. Again, keep it as simple as possible. If you don't believe me, listen to guys like Simon Dixon if you're a big crypto fan. And if you don't know him, Google him and watch all of his fun videos. In essence, he just says, look, at anytime you see the price correct 70 to 80% of the previous move's peak, it's time to start getting in there and buying. It's really simple, folks. Remember this is S19, S17. So, at this point, we also had the 15, 13, 9, 8, 7, whatever the hell they are. So at this point, we actually had a guy on the site who actually did a pretty detailed report and figured that the base cost of production for Bitcoins was about $2,500. I kind of like that. Usually what I found is like in the gold industry, copper, grain markets, usually these markets like to try and keep a little bit of a buffer above the cost of production. About 100, 150%. That's what I found with Bitcoin. I noticed. And really, the most important thing you want to watch for here is one reference. I'd be curious. Let's see if anybody even knows on YouTube. There's not too many people in the Hangout here today. What do you think the one reference piece that when they start talking about this, that we are damn close to some sort of bottom on this thing? It's really, really simple. And if you are a Bitcoiner, then you better understand this stuff. Buying over time in bits with a plan. Check more details on Google. Hey, there you go. Right, we'll do that. Miha Haas says, and what is dollar cost average? Oh, all right. Hey, there's Grim. Miha, get your ass into the goddamn class. No, like Grim would ever say that. Hey, well, there you go. We're close. Hey, Adam. Of course, Adam knows this. He's been around here forever. So isn't that interesting? We got 60 some odd people over there on YouTube, and not anybody knew this. Man, yes and no. I mean, I'm talking about okay, we got to get serious about this. Like serious, right? These people, they're bread and butter. I mean, you see, like Hut Mining, you see how much fucking money they've poured in to their and Mara and Riot and stuff. I mean, these people, they've invested in that and I don't understand that Sailor guy. That Sailor guy, what a doofus. I mean, he went and raised a whole bunch of money. You're in level 3 and you don't know what dollar cost averaging is? Wow. Oh man, I've screwed up as a teacher there. That's not good. Anyway. I don't understand that Michael Saylor guy. He goes and raises a whole bunch of money from his shareholders, more share issuance of his MSTR, and instead of going and buying equipment to mine bitcoins and actually go into the business of producing bitcoins at a huge discount, he went and bought bitcoins in the marketplace at 50 G's. I mean, it makes no sense to me at all. But anyway, it is what it is. So I guess where I'm going with all of this is, what's the one thing that can happen that can make bitcoins completely pointless? Francis says, when everyone says BTC is going to zero, when we know it's time to buy. I mean, it's not bad. DCA is more of a long-term investment concept for 401kers. Yeah, yes and no. I mean, if you think about the little old lady strategy, in essence, that's what all that is about, right? Little old ladies don't want to take too much risk, so they're just going to go and nibble away, and right, we dollar cost average our way in. We're not going to really try and time our purchases. But what we really want to make sure with our little old ladies is that they're not chasing up markets. So try and force yourself to buy at or below reload zones, and then you get away with that. So, all right. So not too many people know this. And if you don't know this and you're like, wow, okay, I'm watching this guy for the first time and I want to learn something new, write this down. Right? It's called a 51% attack. If any of these blockchains gets to the point where they are susceptible to a 51% attack, it technically makes the blockchain pointless. And I noticed, I've been in this silly space now for quite a while, and I noticed that right here, right in here, this is when Microsoft first got into the business. And I remember this is Mike Hearn's rage quit. I hate you all. And I remember right in here, we started to get conversations about, well, what's the potential for 51% attacks? So I do believe that that's the number one reason why the market stopped going down, is people actually started to sort of ramp up and make damn sure that the 51% attack can't happen. And that's it. You know, somebody says 51% attack only applies to POW, right? I'm gonna say yes. I think proof of stake works slightly different manner, but I can't completely attest to that. I do know that. Well, I guess Ethereum still is POWA. So I do know, and I also know, and I'm hearing like out of the Europeans, they're getting all pissed off about POW, and they're going to make it so that, hey, if your cryptocurrency isn't environmentally friendly, we're going to ban you. What a crock of shit, eh? Fuck. Oh God. See, that's the one thing. It's so scary when you have lawyers in charge of these central banks, or who are the mouthpieces of these central banks, is that they know exactly what to say and what not to say to sort of get their case across. They know full well that they can totally push the public's button with this global warming stuff, and it's such a great dodge. So you know the people like Christine Lagarde and the like. Oh man, it's so sad how they twist sort of our perception of reality to get their desired ends. I would imagine that something like Bitcoin is actually a major problem to guys like Klaus, and they're trying to figure out how to put Bitcoin out of business. But anyway, we'll deal with that another day. So anyway, point of the matter here is I distinctly remember 51% attacks conversations started in here. And sure enough, that was your base. And I remember distinctly in last cycle, same thing. Right in this area, we started having the 51% attack conversations. It didn't last very long, but as soon as that started to come up, in came a base and price never looked back. If anything, you want to try and the absolute best opportunity to buy is when you get dumps in these kind of assets that have nothing to do with the story about Bitcoin. And in this particular case, this was the shouldn't we debate mortgaging our kids' future bullshit? And all the risk assets were coming off. The bond market was collapsing, you know, the corporate bond market, all that. Which, oh, geez, here we go again. Is that the same sort of thing? Maybe, like, I actually think the big collapse in the bond market comes this fall. And I think that that's actually, a country like Canada, I think, is extremely dangerous. Commodity country, cycle's over. Cycle ended 2 or 3 years ago. Massive overdevelopment in real estate here. Total complete destruction of our underlying historical commodity based system. It's almost like somebody is intentionally trying to destroy this framework that Canada has basically been under for the past, I don't know, 200 years or so. We were the suppliers of raw materials for the U.S. Market. And if anything, there's probably a lot of equity that's invested in a country like Canada, and it's extremely vulnerable, like extremely vulnerable. So I could easily see, you saw how bad the 2008 crisis was down in the States. I could very easily see the exact same thing happen to countries like Australia, South Africa, Canada, Russia. And the funny thing is, they'll look back and the historians will be like, oh, well, no, it happened because of the war. And I would say the war happened because we're at the end of these commodity cycles and not the other way around. So, like I said, in the tweet that I put out here earlier today, what I'm finding is, I do this work, I know what's going to happen. And I used to tell like my retail client base the same sort of thing. We know what's going to happen. We just don't know what the why is. Why is it going to happen? So I think Europe is technically a short right now. I would love to go buy some cheap property in Portugal. I even saw this place that we were looking at. Somebody they discounted the price by 25% or something like that. And there's like, wow, we originally wanted to sell it for 600,000. Now we knocked it down to 500,000. I could easily see by the middle of the summer, they get so desperate that I could go in and bid 400,000 and they'd probably take it. So, the only question is, are we coming in a bit early? This is going to be a long slog here, folks. And it's fascinating to watch history play itself out. And I've told you guys repeatedly, Canada, stay away from this country. Stay the hell away from this country. It's very, very dangerous here. Unless, of course, you don't care about money. Like, in a weird sort of way, what I want to do in Portugal, I would do it here in Canada, but the prices are just stupid. I mean, it's ridiculous. I've shown people like a 15-acre lot here in the Lower Mainland goes for like $10 million. I can buy a 15, 20-acre lot over in Portugal. And actually, there's one vineyard I was looking at. They're producing vineyards. I mean, you can see the grapes right on the damn vines. And they only want like $500,000. Well, I think I'll take that over fucking 10 million. And then, if you guys remember the movie The Big Short, and when the guy from The Office was driving around the real estate market out in the West and, hearing stories about guys doing funny mortgages and mortgaging, like double mortgages and triple mortgages. And, you see he drove out to like a development and all the people are sitting there with for sale signs on their lots, wondering if anybody's going to buy their properties. That's what I think is going to happen here in Canada, folks. So I would strongly suggest you, hey, if you're buying a home to live in and you can lock in a nice 20, 30-year mortgage guaranteed, bank can't fuck with you, that kind of thing, great, go for it. But I don't like the prices. The prices are ridiculous. And I think that actually getting those long-term locked-in low rates is actually a bit of a challenge in itself. And I don't even want, like when if I buy something over in Portugal, it's going to be cash on the barrelhead. No mortgage, no debt. I am a huge fan of neither a debtor nor a lender be. A huge fan of that. I am seriously contemplating whether we should do something like a GoFundMe campaign for this, because I want to build this TRI sort of campus. I love the fact that we have a guy on the site here, Eddie, who's done just a ton of work putting together some really, really cool opportunities. And we were passing around on the site Xavier's school for the gifted. And that's basically what we want to create over in Portugal. I was going to do Hawaii, but woo-wee, Hawaii. Oh, it got super expensive. We had the opportunity, but unfortunately it slipped through my fingers. So anyway, it's the way it goes. So, man, there was about an hour of holy blah. Hope you guys all enjoyed that. In the short term, if I was trading the corn, I actually like to do studies like these. And actually what I've done here, and probably the way I'm going to approach the crypto market from now on, is I have a matrix. So we have a day trader room on the site, and you can see we've got Bitcoin and Ethereum futures here. So if I'm going to trade these markets, I actually think I would prefer to trade through these. Also heard too that things could get a little tacky if the Europeans start to get real dickheadish about domiciling and stuff. So if you trade the CME listed futures contracts, I think it's nice and simple. So you can see if I was going to trade, you can see my levels. Then also on Ethereum, same sort of thing. We're in double reload zones. If this thing was going to bottom, this is the place that it should bottom, folks. And I did hear recently someone talking about Ethereum's moving from proof of work to proof of stake. So if you did get that big move, of course, that probably will help the whole environmental nonsense out of Europe and stuff. Maybe that launches Ethereum into a new bull run. I don't know. It's got quite a ways to just get back to the old highs, eh? So there's probably some money to be made on these counter trend rallies. I did see people on social media and stuff saying, oh, yeah, we're going to new highs and stuff. I don't know. I don't buy the new highs. I do like the idea, like on the corn, just looking at this. This is, we'll do, this is the spot. This is the most closest contract. So, we'll leave these on as sort of reference pieces, but I do like that as a very significant. Notice there's a little gap there that needs filling in. It's an 877. I think that's perfectly doable. I don't know whether we see new highs. You can make the argument that, hey, Brian, isn't this a megaphone? We need to come up into here. Yeah, it could be. So I wouldn't be surprised to see something up into this area. I think it's predicated on the Fed being sort of relatively friendly. So if anything, maybe what we hear is the Fed raises rates here. Market calms down a little bit. Maybe Russia calms down. Maybe they have peace talks. Who knows? Maybe that sets the stage for a nice little spring rally and just sort of, May, June, sell in May and walk away, that kind of thing. I like a rally up in here. I think there could be some money to be made here. Really do. But as you can see, remember I was saying earlier that I kind of think this is a big sort of head and shoulders. And this was sort of our neckline test here, 47 bars. So here's 47 bars. And oh, gee whiz, what a coincidence. End of 47 bars here is that beginning of April. I get the feeling that we probably need to wait for that silly Gods of War, Saturn, Mars event to get out of the way. And actually, before I leave this topic, I want to show you this one image that my celestial buddy shared with me. Andre is so cool. Where the hell is it? Over here. He did a study of the German stock market. And here are those same. This is planetary oppositions, bullish, and nice simple reference. Jupiter, look at Jupiter Saturn's position. They were in opposition in the year 2000. And how did the planet feel in the year 2000? Felt pretty good. Here is a whole bunch of conjuncts. Oh, Jesus. This is the German stock market. And I mused recently, how do you reconcile German auto sales through this period? Are a lot of people buying German automobiles right now? Uh-oh. I can't imagine that the German stock market is going to be overly excited in the face of what's going on their doorstep right east of them. So, what a surprise. You can see we got to get through this window here. And then hopefully the stock people, and what I think happens here is, we sort of, this is the tide moving in Russia's favor. And then once we get through this, then the tide moves against Russia. And Russia, they better get this military offensive done with and finished by the time we get through this Mars Saturn. Because if they don't, I could very easily see this is exactly like fucking Hitler's Barbarossa and how that just went absolutely disastrous. It went totally in their favor. Then all of a sudden, everything shifted and literally went everything completely against them. You can see the same thing with Russia and this whole Ukraine thing. Everything was going in their favor. And of course, Russia, the irony of it all is whoever said that Russia was good at offensive military operations. They have never been good on the offense. Ever. In fact, Germany was able to hold them off for like 2 or 3 years when Russia was on the offensive, just out of attrition. So, what a surprise. Russia sucks on the offensive. I find that hilarious. I don't know. After that April 4th turns, they might have to be on the defensive. That could get interesting. Anyway, only time will tell. The whole point here is holy fucking planetary relationships. Maybe we ought to pay a little bit more attention to this shit, eh? What do you think? Okay, blah, 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 blah. Now, actually, why don't we do what I was actually supposed to do here? And let's try and answer some questions from the level 1ers about course material. Here we are here. Oh, goodness. Look at Steve RLZ. Oh, look at all these questions. I think Steve, you only get one question a week. So we're going to concentrate on this one question. And all of this stuff, sorry, pal. I'll try my best. I'll give you another hour here. And if we haven't gotten through this, then we'll just leave it for the rest of the week. So 13th of March, halfway through the month. Here we go. What do you think about fire movement? Fire Belgium. I don't know. What do I think about it? Work, income, expenses, increase income, reduce expenses. Oh, that makes sense. Save for emergencies, look solid. Invest efficiently. Okay. Reach roughly 25 times annual expenses. Done. You're financially independent. You can live from your investment returns. No need to work anymore ever. Yeah. Usually we would say that you need 20 times annual income. So yeah, you're close. 25 times. That gives you a nice buffer. Yeah, that makes perfect sense. The only thing I would say about this is invest efficiently. We just went through MMT nonsense where people thought money was free. Let's say you invested efficiently in bonds 10, 20 years ago and you got like 5-10% return. How did you do at the end of that Jupiter-Saturn event there a year or two ago? You were getting killed. You were realizing capital gains by owning bonds, but your actual interest payment destroyed you. Well, not destroyed you, but your rate of return obviously diminished based on the fact that the yields were falling so much. So probably the best way to approach this is to be well diversified. Really make sure that you're on that efficient frontier. You have a really nice balanced mix between stock and equity. maybe even 5% commodity in there. So this is where you really got to focus on that efficient frontier. Because what I found happens is that at the end of these cycles, that's when people are most optimistic about their particular markets. And, if you had invested 10% of your net worth into Russian rubles, how'd that go? But Brian, Russia's the fucking shit, man. So, when you say invest efficiently, you got to be damn careful. What usually ends up happening is people keep piling into what has worked. So, ironically enough, what are people really buying a lot of right now? Let's see if you guys can sort of put 2 and 2 together. And do you think Brian would suggest buying that? What are you guys saying over there? Who has? The USA is the number one loser for offense. Well, I don't know. And the way the Americans went into Iraq there, that's the way you can the problem is once you've taken over, what do you do then? The Americans could teach a course on how to conduct offensive operations. They did the Blitzkrieg. I mean, they just literally took a page right out of the Blitzkrieg playbook from World War II in Germany. That's the way you conduct offensive operations. And I've heard like 2 or 3 retired generals now over the past few weeks go, holy crap, these Russians, this is just a shit show. Well, was Vietnam? See, now, Andre, you're not using your head here. So come on, let's be a little bit more serious about this conversation. Vietnam was basically, it was called a police action. So it wasn't even an offensive operation, Andre. So come on. Afghanistan, same thing. Afghanistan was basically a police operation. It was not, when the Americans went into Afghanistan and they took over like that, boom. A police operation, that's apples and oranges, completely different. So, Andre, totally disagree with you there, dude. All right, so back to our question. What are people heavily investing in right now, and do you think it's a good idea? Yeah. Oh, by the way, Russia's conducting a special operation, not a war. Man, it's a train wreck what they're doing. And the worst part about it is they're all saying that nobody has the balls to tell Putin what's really going on the ground. That's the scary part. Nobody wants to get their fucking head handed to them. So everybody in Moscow is going, you're doing wonderfully. The Ukrainians, they're running, they're fleeing. Nobody wants to fight. That's not exactly what's going on. Anyway, so this image right here, spot on. Probably the big thing here is you want to try and, what they say, pay yourself first. And that's this savings here to invest and sort of free yourself from the future. Pay yourself first. And then I would also say, too, that if you can inject a little bit of the timing that we're trying to teach you in the TRI program, you can actually accelerate this process really fast. Like this kind of scenario, if you take 25 years and every year you just simply put 1/25 of your anticipated savings, and you buy 50% bond, 50% stock, so the money's not going anywhere. Part of it'll go up, part of it'll go down. You'll keep rebalancing. Great, awesome. But just keep a little bit, in things like venture cap, shit coins, all that kind of stuff. And just, with that little bit that you have in the venture cap space, run a little side plan, maybe little old lady, altcoin investing kind of thing. Keep it really simple. Every 3 or 4 years, we go through these nutso insano bull markets. And you can literally make chunks of these 25 blocks in like 2 or 3 years, very, very quickly. So you can accelerate this process. I would say, for a guy working on the line, doesn't know anything about investing, wants to save for retirement. Let's say they enter the workforce at say 30 years old. You put yourself on this 25-year plan where every single year you're going to save one of these chunks. By the time you're 55, you're good to go. Nothing wrong with that at all. This is pretty much exactly what every financial planner would suggest. Solid work. Nothing wrong with that. And also, too, really keep it even more simple. And actually, it's funny. Even the guys that I'm renting this silly or leasing this condo from, they didn't even know this. It's just so funny when I talk to these people. If you can somehow buy, own outright 3 properties, you're set. Because you live in one, you rent out the other 2. One of them you use to pay all your taxes, and the other you use as maintenance, house repairs, insurance, utilities, the whole thing. So all you really need, you want to keep this really simple, is just see if you can get yourself 3 half-decent properties that you own outright. Or you can go this route, and this is sort of like build an investment retirement portfolio. So, BB, what if you're much later in life and started with a 20, 30-year-old? Yeah, well, I mean, what sucks is you gotta jack it up, Sean. The good part about this, though, right? Yeah, so I would put yourself on this plan. So if you're 45, then that means, hell, in our stupid Western societies, your old age pension plans, they don't even kick in until 70 years old now, right? In fact, don't you get penalized? Or do we have any Canadians in the house here? I think you get like penalized in Canada if you actually take your pension plan out before you're 70. So if you're 45, boom, there you go. You put yourself on the plan. By the time you're 70, you're good to go. A lot of people, as I said earlier, this is the one good part about having a mortgage, because all a mortgage is it's a forced savings plan. The only problem with the mortgage, of course, is that you have to pay the banker's tax, that 3 to 5%. That, if you're talking like $500,000, well, that's like $25,000 a year you're paying to the banksters. So I don't like that kind of thinking. It's tragic. I would much rather you just save your money, invest it, and just build your nest egg that way. But hey, you got to have a place to live, right? And all that kind of shit. I would personally prefer, and it's just me, but I would personally prefer neither a debtor nor a lender be. Don't own any money, or don't owe anyone any money. And then that way, you're never anyone's bitch. Ironically enough, what actually kills most of these economic cycles is, simply put, people borrow too much money and they get caught and they get screwed. So I just like the idea that I don't owe anybody anything, not a dime. Every single thing in my life is bought and paid for. But that's just the way I like to live my life. 50 years old, still got quite a bit of hair on the top of my head, and I'd prefer to try and keep as much of it as possible. Okay, well, let's move on here, but this is perfectly fine. Investment per month. Yeah, okay. I mean, wait, did you just get this to off of like the interneting? It looks roughly correct. What are these, like savings rates, withdrawal? Okay, so how much money you're taking out. The irony of it all is it used to be, they used to say, well, $2 million would do it for retirement. Now, I guess they bumped it up to 3 now. Bastards. But I'd also say, too, is ideally what you want And the way that they've sort of set these up in a lot of the Western countries is you want to contribute this money into a plan that's tax-free. So the one good part about having a mortgage, of course, is that interest is deductible. So, and I think they do that on purpose. But you don't really want to do this kind of savings plan outside of an RRSP or a 401k down the States or whatever the plan is in Europe, because then a part of these returns actually has to go to the tax man. So remember that as well. If you are going to do this outside the registered account, you got to make sure that there's a little chunk every single year that goes to the government, which sucks. It is what it is. But on balance, this is perfectly fine thinking. Okay, Steve says, in 1 year, can you make with swing trading the same amount of money that you make with day trading? Sure, yeah. I suppose you could go and buy like a whole bunch of call options. How would you have done on something like, and you're talking like finite numbers. I mean, obviously finite numbers, that's going to be tough to debate. But could you have gone and put on, this is a weekly price chart, gone and bought some put options when this thing head and shouldered out? How would that investment be doing? Would you really want to touch this thing? Like, that's a weekly chart. That's probably like more investment than swing trade. What would be a good swing trade example? Sometimes these swing trades can go absolutely crazy. So this is GameStop. I mean, could you have made a couple bucks on this thing had you gone in? And the funny thing is basically that was a buy signal for me right there. And you go like, okay, I'm going to swing trade this. I'm going to look for a, we can even just do this nice and simple. This is off a daily chart. Yeah, we can go like boo-ba-da-boo, and hell, I'll risk all the way down to this low because I think that this is the bottom. Whatever. Probably more of a position trade. Probably the swing trade would probably just to risk against there. But, let's say you're going to let some of it go at like 2-1, 3-1. There's 2-1 just off of that. Nice little trade. Boom. And then move your stop to scratch on the remaining. So you can see we never came back down to your scratch level. And would you made any money on holding on to the other half of that position? That's 100x, right? Because that buy signal was 4 and it went all the way up to 400. I mean, wow. I mean, that would have been a lot of money. Day trader would not have been in that. So is that a position trade? You could argue this is swing trade in here. I always like the idea to try and hold on to a little bit of free, sell half on a double, whatever you want to call it. And wow, the profits can be just absolutely through the roof. In fact, what I would strongly suggest is that you actually, if you're going to build a plan to try and maximize profits, is you actually build the plan that the goal is to get what they call a free look. So, ironically enough, it could be in day trading. If you can somehow get a free look, and I don't know whether I haven't done too much. And of course, the past couple months or weeks I've been moving, so not even really paying attention. But the gold market, well, even crude for that matter. If you're day trading here and we're down on some lower time frame chart and you happen to catch a pivot, so like here, for example, this is a foggy boggy level here, 2. Well, actually, I guess there, 4.669. Let's see. I was kind of hoping this would be nice and easy. Of course, it never is. Yeah, I don't see anything there. Let's see over here. Well, here's a good one. So this is going to be like a day trader. So So we've got a cute little bottom down in here. Boo-boo-boo-boo. Nice little double bottom. Maybe you buy that breakout. Boom. Sell a chunk. This is an hour or two later. Get your stop at scratch on the remaining, and then you got yourself a free look. And who knows where the hell this thing's going to go. Obviously, day trader are going to be dealing with a little bit higher margin levels, a little bit more leverage than swing trader. But, if you can hold on to that, one of the best trades, and Hogue used to always tell us this, is if you can get in on a trade, so like a day trader. So if you can get in, maybe you're so fucking good, you're off of that double bottom. Let some go here, on 2-1 or whatever, stop to scratch on remaining, and you end up at the end of the day closing out the remaining position at the day high. Now, if this is like, $10 a point or something like that, that can actually be a hell of a lot of profits from there to there. Whereas you're probably not going to have that kind of high leverage on a swing trade. You might do options. And you might find that, Brian, my swing trading plan had me go long here and I sold some here. But because I'm not day trading, I didn't have to take the position off. So I just let the damn thing work. And it turns out I actually sold the rest of my position on this double top a few days later because this happened to be my big fat profit target way up here. So on a relative basis, actually, the swing trader makes a lot more money, but maybe they don't have nearly as much leverage on the line here as the futures trader. So, I'm going to say that they're different animals. Takes a lot of time and practice to get good at sort of what you want and what you want to see. Earnings potential wise, I don't know whether I'd really get into that debate. I would say there's so many different ways to skin this cat. The one thing about day trading, though, is, because they're the reduced margin requirements, which means higher leverage, you have to cover the position at the end of the day. You might be in a totally kick-ass killer level, and you're like, God, I wish I could hold on to this thing. But because it's a day trader and day trader margin requirements, you got to close it out. So being a day trader might actually handcuff you a little bit. I don't know, Steve. I don't know. I hope that helps answer your question. Give you a couple of different perspectives. Can you? Yeah, I think you can. Sure. Will you? Well, it's entirely up to you, really. Stick around for the next year and let's do side-by-side comparisons. Right? The best way you're going to find this out is to actually just, I've always said you don't know a job until you've done it for a full year. So I would expect anybody to start the TRI program to be around TRI for at least a year. All right, next question from Steve. Does quantity play a role in trading? Lower time frame and more trades mean more returns? No, actually, I think it's the other way around. What I've personally found is that actually people that overtrade actually underperform. They usually say actually the best trades develop through the Tuesday, Wednesday London kill zone because that like 80% of pivots in the market happen through that 2-day window. So, if you're a day trader, and the way that I like to look at it is I'll just simply draw up levels, and where are we here? And I'll just basically sit there and I'll wait for the levels to be traded to. And like in here, there's nothing really for me to do on this market. I got to wait for the market to come into these levels. And then in through here, I'd be hunting for setups. And probably like this dip down into here and that pop up, that would probably be a trade. This dip down into here and then that counter trend rally, that would be a trade. Why? Because I'm trading against horizontal support and resistance here. So quite often what ends up happening with me is I'll join the day trader room in the morning and I'll just say, well, I don't have the market near any levels, so there's probably nothing I'm going to be doing today. So I'm much more like I'm a location guy. Location, location, location. I would be willing to wait like this level down in here. You hear Brian talk about candle body lows for trade location. It is a fog and bomb level. And like this, right? That is my fucking bread and butter. And that's what I really want to be focusing in on is trying to wait for that trade that produces that wicked snapback rally. So I hope that helps answer that question. I would actually say less is better. But you really want to be patient and disciplined. Wait for location, then indicator confirmation, then price structure, then go. All right, Steve asked, I'm trying to make some rules to consider each day I'm viewing, doing intermarket analysis. Unfortunately, I discovered in some of them, I don't even know what it means if price goes up or down or what it means if it's correlated or not. I'm going to share them here, and I hope you can help me finish them and correct if something is wrong. Inflation protected U.S. government bonds and non-inflation protected chart. If it's going up, then there is a fear of inflation. If it's going down, then there is no fear of inflation. Generally speaking, what I'd also say too, though, is it's the trend, right? What's the market structure and what's the trend? So, it's around here somewhere. There we go. So that's this guy. You tell me. The message should be pretty obvious. What's the direction of inflation right now? And more importantly, you know what this is? This is all about inflation expectations. So who can help me? What is the inflation expectation right now? No, I haven't done any window yelling out yet. I'm almost afraid to because all these people are all strat owners. They're all gonna shit on me. I don't want to make a whole bunch of enemies. Last place I was in was a house, and it was just Andrew and I. And the neighbors were at least, next door, not right above me or right below me. Anyway, so point of the matter here is if this is pointing up, then it means that we have the market is worried about inflation. And the magic line on this thing is 0. So in essence, people are, as long as this number is below 0, then actually the market stance is deflation. As soon as this goes above 0, then we actually start getting into actual inflation. So how ironic, that we're just trying to get back to the 0 line here. And keep in mind that, well, actually, this doesn't go that far back, but this was way, way up higher here. And that's half the problem probably with trying to analyze this, is that we just don't have that much historical data with these. So, and you've learned this now in the level 1, well, maybe a little bit, A, B, C, D. So this is telling us that we're probably going to get a nice little premium on the tips, and that inflation is a serious problem now, which is so sad. I think what ends up happening here is you can sort of see that this is a big fractal. I don't know where the end of this move is, and hell, David O. It's interesting. He trades a lot of heads and shoulders. He doesn't even really mind if this rally peak is actually higher than all of these peaks, because then it means market structure. We've broken all this bearish structure. But I wouldn't be surprised if we look something like that going forward. I don't know how high we get. Like my hunch is Foggy Boggy's probably going to stop this thing, but that ABCD's got a head of steam behind it. So my hunch is actually this turns into some sort of blow off top like that, which kind of sucks. What that usually means, like I said, I actually like the idea. I mean, I don't like the idea, but it does make a lot of sense to me. I wouldn't be surprised if Vladdy actually nukes Ukraine. So he'll nuke it, through an accident happening at Chernobyl versus like an actual nuclear bomb. But my hunch is Vladdy's going to nuke Ukraine. It's going to get so bad. It's going to get so embarrassing for him that he's got to change the conversation. And, something like an accident accidentally happening could easily be that distraction. Anyway, so point here to answer your question, W's are inflation is rising, M's are inflation is falling. Are you going to use something like this to time the market? I don't think so. This is kind of just, what's the, can you see the forest through the trees? Can you see that we were going through a major downtrend, right? And you might even do like a channel here. Go boom, boom, roughly. And even hell, we can even do that. And hopefully what you see is, well, it looks like we are losing that channel. And of course, our rule is we can't really take a trade there. What we really want to see is we actually want to see this thing W on the other side of this trend line, and there would actually be a trade. So this is more, and you're not really going to trade this. This is more, forest through the trees. What's happening sort of psychologically in our society? Hopefully you can see that this really works well with that Jupiter-Saturn cross. Hopefully also, too, it explains why the MMT people are actually thinking the way that they were thinking, that kind of stuff. And, of course, that's the end of a very, very long cycle. I think you could make the argument down here. This is actually exactly where Sjord started to go shopping for his mortgages. If you were going to be a buyer of a mortgage, actually, I guess a seller of a mortgage, buyer of a house, this is exactly when you wanted to pull that trigger, right? You knew that that was the end of the downtrend. And we've just been going up since. We also got another little W that just came in there, right? So that's further confirmation. Inflation's on the rise. And if anything, this is absolutely perfect market-based proxy to tell you a real measure of inflation. What's really happening, not some government agency, bankster sort of mouthpiece line. That's that one. Let's see what else he's got here. Put call ratio. So this is the number of puts that are bought in the marketplace versus the number of calls that are bought in the marketplace. And I mean, if you just, Steve, just think about exactly what we teach you in the course program. Why do people buy put options? Well, they buy them for insurance. When do you typically buy insurance? After the flood. Because you're like, oh, God, oh, look at what the damage did. I guess I better go buy insurance in case it happens again. So usually when these numbers spike, like you see back here, and probably even more so, yeah, back here, remember, this is that crisis that got us going, right? That whole sort of, shouldn't we mortgage our future, blah, 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 right? So really good analogy there. And then conversely, if you see this right down at the bottom, well, then that means that people are buying more calls than puts. They're not buying any puts. And when do people act like that? Well, when they're pretty optimistic and they think, hey, it's good times. I don't need to buy insurance. So you see the market at these extremes. This is probably a really good anecdote of market tops. When you see this indicator at market extremes, it's probably a really good indicator that we're near some sort of psychological bottom. It's really simple. Keep it simple. You want to do things like moving averages on something like this to maybe help you see it a little better. Like an exponential moving average. Actually, no, that's not going to work, is it? Because that's off of that. I wonder how I can get an exponential moving average on this thing. Maybe I go like that. Add indicator. There we go. There we go. So you want to slow this down a little bit with an exponential moving average to help you sort of see what's going on. You can do something like that. You tell me, does this world look like it's getting happier or unhappier? That's using the moving average. What did we say? We said high put to call ratios. Is that the market happy or unhappy? The answer is unhappy. Low put to call ratios, that's when the market's happy. So if you see a big old W in this, what does that generally mean about investors' sentiment? Probably not very happy. And for us to get back into sort of happy, what you're going to need to see are M tops here. And you can see them all along here. So do we have an M top in here yet? Oh, not quite. We might actually even go and W out and head higher. You can see they tried to M top here, and it came down and went boom. Now I'm unhappy. So the way I interpret the moving average here, which is just, trying to slow that herky-jerky signal a bit, market's still not very happy. And probably this market stays unhappy until the Fed actually starts saying, okay, you know what? We're done raising short-term interest rates. Now we're going to start taking interest rates lower, which might take some time. Actually, usually they say the way it goes is 3 steps and a stumble. So you might find that the Fed actually raises interest rates, takes it off zero, and then the market, and hopefully Mr. Putin calms down. And the market actually comes and settles down a little bit. Because you notice that this also moves in a bit of a sine wave, eh? So you can go like, all right, we could go, that's a low there. Looks like that's a peak there. Maybe, something like that. So you can see down, up, down, up, down, up. So you can see we are in an upswing, but we actually should, at some point in the not too distant future, actually enjoy a bit of a calming down here. So my hunch is that this has gone a little bit too far, too fast. And the irony of it all is you can do everything that we teach you in the education program. You'll want to see where pivots are going to come in. Probably best to hunt for reload zones. And notice, look at that reload zone. Down, up, back up we go. And even this one down here, right? And you want to ideally buy this kind of thing. Buy, the calls are super bid up and the puts, nobody's buying them. So that means that this must be the top of the market. And I might argue the puts are getting bid up here. Lots of people are buying puts. And so as a result, that's probably a bottom of the market. As soon as this thing rolls over and that M comes in, then, hey, we're back to happy-go-lucky. And that should take us, remember we've been sort of thinking, especially with Bitcoin, that we'll probably see a bit of a rally here into sort of that May, June time period. I kind of like that. Sell in May and walk away, the seasonal trade, all that stuff. I like that thinking. And I also heard too that, I don't know if there's much validity to it, but, peace talks are actually getting a little bit more active. Okay, so hopefully that helps there. Volatility index, basically the same thing as your put calls. So if the volatility index is going up, think of volatility as sort of like the panic of the market. So same logic as the put call ratio. People panic and buy put options, and that's a moving average, right? So the actual indicator is that thing. Panic, buy puts, buy puts, buy puts. I'm feeling pretty happy-go-lucky. Don't buy puts. Puts are for suckers. Buy calls. Same logic with the VIX. I would say, you know, you don't really want to be trading any of these. I know there's a lot of people in the market that are like, oh, I trade VIX options and all that kind of stuff. Ugh. I hear more people die 1,000 deaths from these things than make a lot of money trading them. So, and also too, keep in mind that this VIX index is very, very manipulated. So be careful here. But it's just it's that same market message. So, you know, bottom end of the range, exactly like the put calls. Calls are getting bid up. Nobody's buying puts. Volatility premiums, very low. And of course, in our level 3 program, we go into this in detail. When the volatility index is spiking higher, it means that the public is panicking. They're paying up for options and they're panic buying, FOMO, all that kind of stuff. They don't really think about the price that they're paying for these assets. That's a sign of market panic. And of course, that's usually a contrarian indicator. You can see we're up in sort of topping area. If the market's pretty jittery right now, I suppose you could argue if this thing rolls over here, and you know, you could even do a moving average on this one. Same sort of thing. You can see I study a whole bunch of moving averages on this one. But, you know, we start getting an M in the fast moving average, or we cross below this medium term moving average. Probably that says that the sell off is done. You can see when these things get really going and then they cross over, market can rally back substantially. So be careful. I mean, it's beautiful bottom down here. What a great looking bottom down there. That set up that meltdown. Shouldn't we debate mortgaging our kids' future? Right. So you could see on the VIX index, kind of these are the moving averages. It was saying, hey, pay attention. And I hate to say it, folks, you can see it down here. You know, W's. VIX is saying, pay attention. VIX is in. I'm not happy. The public is panicking. That's what's going on here. So, are you going to trade this signal? Yeah, I think again, it's just sort of listen to the forest through the trees. Is that the kind of environment that you want to go like apeshit bullish on the long side? I don't think so. That's maybe we just ought to leave this thing alone for a little bit and let's just see if we can get some sort of bottom in these markets. Did I not show you? Like this image here should be basically this image here. It's the exact same thing, just in reverse. Do we really want to be really bullish in the face of that? And all of our planetary intermarket analysis, talk about intermarket analysis relationships, eh? Holy shit. Do we want to maybe wait for this window to get out of the way before we start getting bullish again? I think so. So hopefully you're starting to, connect the dots here. All right, next up on the hit list, Dow Jones Industrial and Dow Jones Transport. So this is going back to Dow theory. It was put together by Charles Henry Dow, over 100 years ago. Dow Jones Industrial and Transport should be positive correlated. More importantly, you want to see that the transports are moving to new highs if the Dow is moving to new highs. If the Dow is moving to new highs and the transports aren't, that is divergence, and that is a major problem. And in essence, if the industrials are getting bid up, then that means, these companies are making more money, right? They can enjoy higher stock prices, higher PE ratios, all that kind of fun stuff. If the companies are actually producing more goods and services, and typically goods, then those goods have to be shipped to the people that bought them. So that means that the transports must be doing well, and they must be getting purchase orders to ship stuff around the country. Have things changed over the past 100 years? To a certain degree, yes, because our economy is a little bit more service-oriented. But on balance, it's a pretty darn good measure. And unfortunately, I think, even right now that the transports, here are the two images. So you can see the industrials are making new highs. So that's a higher high. Industrials are in teal. higher high, higher high, higher high. Transports, IYT, no new highs. That's actually a huge divergence. Just barely squeaked out a new high, but ooh, awfully suspect. I mean, really, I would just say this is the top of the range. And again, tried to move to new highs, but really right up at the top of the range and failed again. So major warning sign from the transports that this market is not bullish. And sure enough, they've come back down. Now, if you see the industrials take off here and move to new highs and you see the transports not, then that's telling you there's more of this shit coming down the pike. So right now they seem to be moving in lockstep. That's always a good sign. We'd love to see them both W out, kind of like what you saw here. And in this particular phase, you go, well, it looks like they're both pointing up, so rock and roll. Industrials, oh boy, here we go. We're cranking to new highs. Come on, transports, get your butt up there. Come on. And then you notice, transports rolling over, and we didn't really go to new highs. Be careful. And sure enough, boom, major dump. Then industrials come back, another dump, sort of trading range. Industrials try to break out here. Okay, is this a real signal? Is this a real signal? Well, transports are not. And then, of course, right at that key juncture level, everything rolls over and boom, back down we go. So clearly, transport's not making new highs. I don't even really see a W here. This is a V bottom, new low. So really, there's no bottom here. And I think on balance, if you had said, especially through this phase right here, that this market is not healthy, and you better just leave this alone for the next couple of years until this gets healthy again, that's not a bad idea at all. And of course, Mr. Banner, 2022, 2023, these are not supposed to be good years. So, just business as usual. All right. Let's see. Industrials and U.S. bond chart. Well, okay, so the issue here is normally, you have a choice of investing in growth or investing in security. And bonds, since they are a government guarantee, well, not even government. I mean, you have U.S. bonds. Really, I would even say, if you're going to say U.S. bonds, then you probably ought to say something like U.S. government bonds. We showed you the corporate bond market there. It looked like an absolute train wreck. So what we're really talking about is government guaranteed paper. And in this case, what we're really saying here is you have a choice of investing your money in something that has a guaranteed principal, or you can invest in something that has unlimited upside potential. Theoretically, bonds do have unlimited upside potential, but of course, interest rates and the general trend of them are really what's dictating the direction of bonds. But I know lots of people that just made a living off of buying bonds that are trading at a discount to par and then just holding on to them, and then they mature at par, and then they get a nice little capital gain along with their coupon payment. So the simple way to think about this is just Dow Jones Industrials, that's common stock. Think of Eastman Kodak. Pull up that chart. American Leather and Saddle. That's a really good Dow Jones Industrial stock. Xerox was a Dow Jones Industrial stock. RJR Nabisco at one point was a Dow Jones Industrial stock. I mean, the ones that aren't doing too well these days, look at something like IBM. Hell, that used to be like one of the bluest of blue chips. They used to call it Big Blue. Yeah, it's all right. It's not great. And then, of course, like I said, American Leather and Saddle. I bet you none of you have never even heard of that company before, and yet it was a Dow Jones Industrial stock. So Investing in common equity, there's no guarantee of principal. And often, if the company's prospects are not good and their earnings are falling and they, maybe last century technology, stock might go right off the board, might just disappear. No guarantee of principal at all. Government bonds have a guaranteed principal. Bond matures at par, and in essence, it's a loan. So it's kind of like, what temperament are you in? Now, there can be situations where you have the Dow Jones Industrial Average moving up and you have the US government bonds prices moving up because the trend in interest rates, like we saw over the past 40 years, Jupiter, Saturn, Cross, all that stuff, the trend is for lower interest rates. Sadly, we're not in that environment anymore. We now have 40 years of rising interest rates ahead of us. Oh, wonderful. It's ebb and flow back and forth, but in essence, you have to understand that sort of guaranteed U.S. bond market and actually all global interest rate bond market moving up. Those are the days of the past, not the future. So it's going to be a little bit tricky, but on balance, if stocks are seeming expensive, you're going to see bonds probably bottoming out. That's like our efficient frontier kind of thinking. Stocks are expensive because economic growth is really strong. Companies are making a lot of money, but that also comes with higher inflation expectations. So bond prices are down. Interest rates are rising. Bond prices are down. Then the economy breaks. Maybe the Fed's raising short-term interest rates, so they get it to the point where the financial services industry has to lose money. The market breaks, we go into recession, stocks go down, bonds go up. Bond price goes up, interest rates are going down, bond price goes up. They are inversely correlated. So I hope that helps. We do talk about this quite a bit in the market material. Think efficient frontier. Market breadth, 13 EMA of NYC advanced decline versus Dow Jones Industrial. I wouldn't necessarily say versus. What I would just simply say is, what is the trend in the broader market breadth? And that's basically the same thing as what we do we do market breadth through buy and sell signals based on DI. It's the same logic. Advanced decline line. All this is the number of stocks advancing on the NYSE versus the number of stocks declining. And there's a whole bunch of metrics, right? I happen to have, this happens to be the NYSE advanced decline line. It's the same logic as the DIs, breadth. W's are generally bullish, i.e. market more stocks are advancing than declining, and then conversely, M's are bearish, more stocks are declining than advancing. And it's the same logic as the site's breadth indicators here. It's identical logic, no difference whatsoever. And I think all you guys are learning pretty well how to use the breadth indicator for crypto. So just think of this. I mean, you see where the teal line is. And interestingly enough, off the histogram, you can actually see that crypto is technically oversold, minus 75 on the medium-term basis. So I even put a tweet out today saying, histograms minus 75 on the medium term. If both of these things go oversold, that's a huge buy signal for crypto. And then you look at breadth and, oh, gee whiz, look at this W that the teal's trying to do here. Well, that's basically the same sort of thing. The market is washed out, heavily oversold, and we're actually trying to put in a buy signal here. It's interesting to see what the crypto universe is doing here. We're getting sort of a waffly signal right at the midpoint. Do we start seeing a huge outperformance from the big boys? Maybe. We'll see how it goes. But anyway, interesting that the crypto breadth here it's the exact same logic as the advanced decline line breadth off of TradingView. So it's identical thinking. If anything, I kind of like our signal a little bit better. This is very herky jerky, and all these are two moving average relationships. If you actually look at the advanced decline line itself, it looks like that. How the hell are you going to use that? So I studied just the moving averages. That's the same thing as the breadth indicator on the site. This is the 13 EMA and the 30 SMA, because the actual breadth daily, it's just up, down, up, down, up, down, choppy. All right. Where are we here? NASDAQ composite. If it's going up, then it means. If it's going down, then it means. Well, I mean, it's the same thing as the New York Stock Exchange, the Dow Jones Industrial Average. NASDAQ's obviously more tech heavy. So as a result, and you've all seen this, if you look at like NASDAQ and Bitcoin and then oil prices, they almost look like they're opposite. And I've told you guys this repeatedly. I know I've said this to you, Steve, that if oil prices are rising, then purchasing managers will halt purchases of high-tech equipment to increase productivity, because they have to spend more money on keeping the lights on and the gas in the gas tanks. So they often move opposite with energy prices. T-bond futures, basically T-bond futures are the bond prices that we were talking about up here. So in essence, you can basically fill this in with what's the conversation up here. So interest rates going down, bond futures prices must go up. If interest rates are going up, then T-bond futures prices must go down. Gold index, if it's going up, then investors think a recession is happening. If it's going down, then they think not in front of a recession. No, I wouldn't argue with that. I would argue more that gold moves on inflation expectations. And I might argue that the first rally that we saw in gold there a while ago was all about boom. This rally that we saw back here, what do you think this was all about? Actually, that's probably not the best place. Let's go over here. Okay, why do you think the gold market, 2008, hint, 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 up to a peak in 2012? Why do you think that happened? Answer is U.S. housing crisis. Fed initiated quantitative easing, which is quite literally diluting the purchasing power of the currency. The gold price offset that. That's why there was that rally. And you might argue that the market saw this coming, right? There's the end of the baby boomers' big sort of growth cycle. As of here, this is all bullshit, right? This is George Bush Jr., their nonsense, what they did in the Middle East, all that kind of talk. So then we just had, shouldn't we debate our future, mortgaging our future? Let's print a whole shitload more money. So why did the price go up here? Same thing. So hopefully you can see the gold price just simply goes up on anticipation of inflation. It's pretty simple. Do we break out to new highs here? As I said to you before, we see what the hell that corporate bond market looks like. It looks like it's about to get slammed, and my hunch is when it gets slammed this fall, you're going to have Powell come out and say, oh boy, we got to throw a bunch of more free money at these capitalists or else we're in trouble, i.e. crisis. going to print a whole bunch more money. Maybe that's how your Bitcoin goes zipping up to hundreds of thousands of dollars. And I wouldn't be surprised if the gold market moves higher. In fact, probably the gold market is already getting ready for that. It knows that another big whack of spending is coming, right? So we could say that I think probably the market saw that the corporate bond market was going to need a bailout. They saw it coming, right? And that was about the middle of July of 2019. The actual bailout didn't come till March. But that's what that rally is the market saw that big inflation push coming. And I get the distinct impression they see another big inflation push coming here. So that's I mean, quite literally, the gold price is just simply a reflection of inflation. And I don't think it necessarily has to move with a recession. Recession's not the right thinking here. Think inflation. Okay, US dollar index, if going up, then there's fear in the market. If it's going down, then there's greed in the market. Technically, yeah. This is more about, I think the key here is this word. This is about the index, not the US dollar itself. So, since Tricky Dick took the Americans off the gold standard, we live in this fiat currency crazy world. And the US dollar index is actually nothing more than a basket of all of the Canadian dollar, euro, I think Swiss franc is in there, Japanese yen, Australian dollar, all that. So a rising US dollar index is all about get me the fuck out of Canadian dollars. Get me out of euros. Get me out of Australian dollars. Get me out of yen. Get me out. I'm not going to say that, Cole. So this is a tricky part of your education, and most people in the public they don't understand this at all, and they never will, and who gives a shit about them? They're so stupidly uninformed, it's almost laughable. So when we talk about the US dollar index rallying, it is, oh my God, we've got trouble. Because technically this whole system, and you hear Chair Powell, saying it, US dollar still the world's reserve currency and all that. And the whole damn system is leveraged off of the US dollar. It's super important to understand that is this conversation, US dollar index, okay? The actual value of the US dollar itself, the only way that you're going to see that is if you do the actual measuring of your asset and you do this funny little, this is M2. But look at this symbol that they've got us using now, WM2NS. Oh boy, what a mess. So this is actually the assets valued in US dollars, not the US dollar index. And this is the tragedy of this whole damn Fakezi. Is if we actually value these assets in US dollars, then you actually see things like the stock market. We're nowhere near those old highs, and and this is, I got angry at even an old TRI student. He kind of was a flunk out. He took the level 1 course, but totally didn't really do very well with the education. And the guy, he just doesn't get it. And of course, he's all like, "Oh yeah, I bought gold, and I'm so fucking awesome. I made a fortune in gold." Gold went zooming up, and look at me, I'm so fucking rich. And I said, well, are you? So here is gold priced in those US dollars, not the US dollar index, but actually priced in US dollars. And lo and behold, you see that actually, on balance, gold really hasn't done a hell of a lot here, has it? It just goes to show, you're all seeing, oh, look at gold going, look at me, I'm getting rich. Gold's going through the roof. Well, not really. This is just a big fucking accounting trick that these cocksuckers have pulled off here, which is just, it's so depressing, eh? So, and I also think too that there's no way in hell the powers that be are going to let gold price itself at what it should be priced at. Does it not make sense that let's go and create this brand new thing out of thin air, and let's get the public all jazzed about using this new thing to value dollars and to value the system, which nobody really owns. It's not really that well known in the world. I mean, it's growing, don't get me wrong. But we got to figure out some way so that this gold price does not do what it actually should do. And, I hate to say it, folks, but a lot of people, and I am one of them, believe that Bitcoin's actually a pet project of the CIA. This whole Bitcoin idea was specifically created so that the public would not go and buy this gold. Because if the public did go and buy this gold, what they would normally do, instead of buying Bitcoins, which they've been conned into believing is 21st century solution to this fiat monetary problem. Well, if Bitcoin didn't exist, this gold price would probably be substantially higher, and the U.S. would be broke. The whole damn system would be broken. So, in a weird sort of way, yay. I'm along Bitcoin from $460. So you can tell them you should be able to know how I'm feeling about the Bitcoin. I love the Bitcoin here at 38,000, fucking A, but would I buy Bitcoins here at 38,000? I don't think so. Did it do its job? Did it, number one, prevent the public from paying attention to gold through this cycle? I think so. I think it did a really good job. And of course, too, because it's relatively brand new, it's so funny. I remember talking to a guy like 2 or 3 months ago, and he didn't know anything about investing, but he's like, well, I got to go and buy more silver. Yeah, it's time to go and buy more silver. So that's the way these people act, right? And now the problem here is you get everybody and their brother loaded up on gold and silver. Which way do you think the market's going to go? Ironic enough, it usually goes the other direction, which is so sad. And I think that's basically what the 1% has done here. So, hats off to all you guys who were able to buy your Bitcoins and take advantage of it. And then, I told you guys repeatedly in the past that, yeah, Bitcoin goes up to 100, 200, 300 million dollars, but your loaf of bread goes to $5, $10, $50 a loaf. It's kind of a zero-sum game. The people that you have to feel badly for are the gold bugs who expected gold to actually be the inflation proxy. And they've just been left behind. All right, number 5, why do we use 113 in fib extensions as is not a fib number or midpoint? Well, it kind of is. And actually, I even had this done up here. If we use these fibs and then we do fun little math with them, I think this is how we come up with the 113, and it looks like it's 112.8668. So maybe call it 113 rounded off. And if you do decide to stick around in the education program, in the level 3 program, we do a deep dive into harmonics. And you're actually going to find that a lot of harmonic levels set up off of this 113 level. So it's actually pretty darn important for harmonicans. If anything, we should probably have Steven come on and give you a nice lecture on the significance of 113s. I'm sure he would love that job. So yeah, 113 actually is a very important number to harmonicans. And last question here. Hi, Brian. Are there any other crypto that move independently of BTC like Luna? Thank you. Uh, I mean, the only reason why I think Luna is moving sort of independently of Bitcoin right now is because of one thing and one thing only. Let's see if you guys can answer this question. Why would Luna be moving on its own relative to Bitcoin right now? Yeah, that's one thing. What's another way to say that? Yeah. How about they're doing something? I mean, that's the one thing I like about this Do Kwon guy, man. It seems like he's always got something in the hopper, right? I think we saw there was there was one that actually came up pretty strong on our screeners recently. And it was kind of bucking the overall trend. And I asked around, like, why is this thing doing this? And people are like, oh, yeah, well, it's got this on the go. It's got that on the go. It's doing stuff. So, ironically enough, the reason why assets sort of disconnect with Bitcoin is that they actually got something on the go. You know, it's interesting, like Waves. Waves, of course, is over in Russia. And, you know, I suppose one could argue it's had a hell of a lot better run here of late than Bitcoin. And of course, you know, they're doing stuff in the Russian market. But what was the one that I was? There was one. Well, you know, Mana. You know, over in Decentraland. Be interesting to see how he's doing relative to Bitcoin. Actually, he's underperforming. Nothing really to get excited about there. If anything, oh yeah, like this Wi-Fi. These guys. That doesn't look like the Bitcoin chart totally. Maybe a little different. But I remember there was it wasn't Halving. Which one was it? It was I can't remember. Anyway, it was just like every single day it seemed maybe it was this Atom. It was like doing better than Bitcoin. Oh, that doesn't look good. Oh, look out. Um, so really the answer I think is just I remember there was this hero, remember it jumped up there because it had like some big deal that it did, big financing deal and stuff. So, really, the bottom line here is if your name has a fundamental driver that's driving the story, like this thing, what the hell's going on with this UBT? I mean, it's not on much volume, but that kind of looks like a W, doesn't it? So, what's going on here? Is there some sort of fundamental reason that this thing's moving? And I would argue that the reason why Luna could outperform of late is I think they've got a whole bunch of stories that are on the go, new protocols, all that kind of fun stuff. So this is a perfect analogy. I think it was maybe that AVAX. Oh no, that doesn't look good. Oh Jesus. You know, are these DeFi names going now into the shell? Maybe they're turtling a little bit. And so now they're going to underperform Bitcoin. Then, of course, you also now have Christine Lagarde and all those, European central bankers all wanting to shit on crypto. Are they going to start targeting different cryptos? But I would say the number one reason why Luna was outperforming there versus underperforming is because they just have a lot of stuff on the go. And often I find that if a story has stuff on the go, it can buck the overall trend. So great analogy. Now, you know, with rational investors, what we really should be is we should be looking for good fundamental stories. Something's actually happening. You know, people are, you know, working away on projects. They're raising money. They're getting listed on different exchanges, whatever. And then, you know, you've got your sort of vetted list of, hey, these are the coins and these are the ideas where they're actually doing stuff and there's stuff coming down the pike. Now I want to go hunt technical setups on these things. All right, so that's basically a summary of all the questions that were asked this week. So I hope you guys enjoyed that. Um, feel free to hit the like button, subscribe, ring Colleen's bell, all that kind of fun stuff. And we'll try this coming Wednesday to do another one of our crypto shows. So look forward to that Wednesday evenings. I hope Steve felt like he got his money's worth. I tried to answer as many of his questions as possible. And if I didn't, feel free to come back and say, well, Brian, you tried to answer it last week. Let's have another go. I still don't quite understand. I'm going to go get pretty for Liam right now. So if everybody could close their eyes and give me a big, Andre, you already beat me to it, eh? Give me a big karmic wish. I mean, it's fascinating, Liam. He's low functioning, nonverbal. His anxieties come out in the most bizarre way. And I haven't really talked to you guys too much of late, so I haven't been getting your good karmic wishes, and Liam's been having a bit of a challenge of late. So everybody give me a good, nice big super karmic goodwill wish for Lily. Hope he's in good frame of mind. Also too, yeah, well, I guess I've talked too much here today. Why don't we leave it at that for today? So maybe come in and check in with our free 30-day trial. If you enjoyed my rant here today and you're listening to the first time on the site, and we'll carry on the conversation tomorrow with good old Stewart. He'll give us an update on the dashboard and how things are going in Luna Land, and I think he's doing quite well there, so that's good. And hopefully all you level oneers are feeling like you're getting good value for your money spent. Considering the inflation in this world, I think you're getting ridiculously good value for the price point that we charge you guys. So hope you're enjoying the program. Gotta say, just listening to Grim, it's beautiful just listening to, we have a really, really good team of professionals here that know their shit. They talk with confidence. They're relaxed. If you do this game of investing correctly, believe it or not, actually, this game's actually kind of boring if you do it right. Unfortunately, people they get bored and then they end up starting to tinker, and that's usually where they end up getting themselves into trouble. But yeah, all right. So back in the saddle. Took a little time off to move. I sort of got the new dig set up. Wish me luck with Liam today. Look forward to chatting with everybody tomorrow. PMA for the win. If you're on the site, you want to check out the Brian's Hawaiian Retreat plan page, the BHTR. Like I said, we're considering Portugal now. Some really cool properties. Eddie's put a lot of work into that. Maybe we'll even fund the project with something like maybe we'll even do like a Patreon or a GoFundMe. I don't know. I'm thinking about things like that. But also too, we did have quite a few people that were interested in the Hawaiian project, so I'll have to just get them back up to speed. But actually, I'm really excited about Portugal. I'm feeling really, really optimistic about that. So, all right, I think we'll leave it at that. Have yourselves a fantastic rest of your day. Wow, look at that. There's a statement. You ready for this one? Listen to this. Ready? Here we go. Hi, Brian. Surprised that you support UKR. Oh, what the hell's UKR? Oh, is that Ukraine? After all, what happened to Ken Press? Press is lying plus Trump used to say in a weird way that the virus come from China. The virus came from a town in Ukraine. Oh, you guys are great. You know what I am, Nicholas? I don't know how old you are. I hate doing this sort of high road shit. But actually, Chris, our show director here, and we had a great conversation yesterday. I am anti-death. Uh, I had the very unfortunate circumstance of losing the love of my life. And I mean, 11 years, I can't get over this. I hate death. I hate pain. And I live with pain every fucking day of my life. I don't care, I mean, the stupid part about bullying and money and all that kind of stuff is, they're all, oligarchs are everywhere and they're jerks and all that. And if we can somehow work towards, self empowerment and empowering you, Nicholas, yourself, that's what I want. And I don't want pain and I don't want death and I don't want suffering. Um, I'm not making excuses for either side. These humans are nasty creatures. But blatant murder, which is basically what Mr. Putin is doing here, when you declare war and you move in earnest into another country and basically say that you either surrender or we're going to kill you, and then you start seeing children being murdered right, left, and center. I'm not in favor of any of that. I don't like it at all. So I'm not saying one side is righter than the other, but I don't like death. And I know spirit doesn't like death. And literally, I've spent the past 11 years of my life being completely selfless. I mean, I don't live like a fucking czar. I live very humble, very frugal life. I don't really have that over the top aspiration for material wealth that unfortunately a lot of humans have, and it's all about bullying and being violent and just bad karma, bad spirit. I'm sure spirit just looks down at us and is just like, God, when is this species going to evolve? So I'm not saying one is righter than the other. In fact, Nicholas, maybe you can help answer this question. How do we know when these politicians are lying to us? And I don't care if it's Winnie the Pooh. I don't care if it's Vladdy the cocksucker. I don't care if it's Justin, Castro. I don't care if it's Mr. Trump. I don't care if it's Mr. Biden. How do you know when they're lying to you? So I'm not making excuses for any of them. But what I am saying is, I'm going to spend whatever time I have left on this planet, and I don't have much time. I mean, a human lifespan is nothing in the span of the time of the universe. It's almost laughable. But I will spend whatever time I'm given here. I will spend that time to try and help. There's not really much. I'm not really that good. I'm not even that good of a person. People have a hard time staying friends with me for a long period of time, and I know it. So I'm not going to sugarcoat it. But whatever time I do have left, I'm going to try and help my boy as best as I can. And I'm going to try and help you people as best as I can. I've got a couple skill sets that I'm somewhat okay at. I think I've learned how to sort of manage emotions when it comes to things like money. I have seen that if you actually empower yourself, you can free yourself from all of this slavery, and like just make banksters meaningless. If you're sitting on 1,000 Bitcoins, 5,000 Ethereums, $500,000 in the bank in this currency, $500,000 in that currency in that bank, sitting on some properties over here, sitting on some properties over there. Does it make any difference what these stupid banksters do? It doesn't. So the most important thing here, Nicholas, is you have to learn that empowerment. That's what I'm here to do for you. A lot of it's bluster, and yeah, I know I'm a loudmouth son of a bitch, like a lot of other people in this world. I'm not perfect, not by a long shot, and I'm just here to try and help. You notice there's no corporate endorsement of these videos. I've been talking to you here for now, 2.5 hours. Nobody's paid me a penny. So I hope I helped you a little bit here. Maybe there's something I've said over the past couple hours that helps. And actually, what we're really wanting to do now is we're actually wanting to create like a physical campus so that TRI actually has a physical place in this world that you can actually, maybe your world is falling apart and you can just come to TRI and just hang out at our B&B and just hang. So Xavier's place. That's right, Edward. So didn't mean to get all heavy on you there, but I really hope, Nicholas, can you please answer me here? Like, do you understand my motivations a little bit better, all this? I really hope you do. All right. Gonna leave it at that. So wish me luck with the boy. The funny thing is Liam doesn't give a fuck about Bitcoin. He doesn't give a fuck about nuclear war. He doesn't understand any of that. All he wants is I want my car ride. I want my chicken nuggets. I want my root beer, no ice. And if I don't get it, I'm probably going to take a piss in the backseat. So, wish me luck. Let's hope McDonald's has all their inventory that I need and the car is in good working order. And I can come back and do it all again with you guys again tomorrow. All right, guys. I wish that was a great day. PMA for the win. Nicholas, you did not answer me, you cocksucking son of a bitch. Quit with all your politic bullshit and just be a good human. All right, everybody. All the best. And bye for now.